Ladies and gentlemen, can I please have your attention, please? I think we all had a very nice lunch, but now it's time to get back to discussing another interesting item. My name is Freek Janmaat. I am working as head of the economic section in the EU delegation here in Skopje. I've been working in a couple of other Western Balkan countries as well, mainly in economic jobs. And before I joined the EU, I was working at the Dutch Ministry of Finance. Now, before our lunch, we were talking about challenges to the world economy. Now we're going to talk about macroeconomic policies and public finances in post-pandemic times. Of course, first, what are successful policies so far? What are policies for the near future to continue? But also an equally, I think, interesting question is, until when can these policies continue? We had in July the so-called joint financial and economic dialogue between ministers of finance and central bank governors of the region here with their counterparts in the European Union. And there it was agreed that support should continue until a self-sustained recovery is firmly underway. Now, this is easier said than checked. When is a self-sustainable recovery underway? And this is a dilemma which I think we are also in the EU struggling with a bit. We have temporarily suspended the Maastricht criteria, the 60% debt, 3% deficit, until the end of 2022. Our European Central Bank, despite slowly but steadily creeping up inflation, is still having very low interest rates. It's continuing with the quantitative easing, at least until March next year. But of course, there might come a time when we have to reconsider this. There is this saying that when the sun is shining, you should repair the roof on your house. All the more so, you can also apply this maybe for public finances. Now interest rates are low, but what will happen if they rise? It's not to be excluded. It might be a problem for public debt. At the same time, this region, as well as Europe as a whole, is facing an aging population, which is bound to result in higher costs for healthcare, for pensions. So an increase in public expenditure is likely to happen in these areas. So all kinds of interesting questions which I think would be very interesting to discuss, and I'm also very happy that we have very interesting guests to discuss them. We have ministers of finance, although I have to say that unfortunately Minister Milojko Spajic of Montenegro had last-minute obligations which prevented him, unfortunately, from participating. But we still have, of course, the host, Minister Fatmir Besimi, Minister of Finance of North Macedonia. We have Minister Hikuran Murati of Kosovo. Yes, please join the stage. We have also the Deputy Minister of Finance of Albania, Mr. Besart Kadia. Then we have the IFIs. We have Mr. Alfred Kammer, the European Department Director, who is joining us online. Welcome to you as well. We have Ms. Linda van Gelder, which is the Regional Director for the Western Balkans of the World Bank. And then I'm very happy that we also have the National Bank Governor of North Macedonia, Ms. Anita Angelovska-Bezorska. And to end also, very interesting, we have the angle from the Parliament, because we have the Chairman of the Parliamentary Committee for Finances and Budget with us, Mr. Timcho Muchunski. So, now that we're all seated, maybe just a few very short remarks. As Walter Defa said for the first panel, I would like to also, let's say, respect the time we have. I would like to have 2 rounds of questions. I've been in touch with quite a few of you. And for each round, maybe up to 6 minutes. We have a bit more time now that one speaker dropped out. Again, we will have a written summary being prepared, so that will be shared tomorrow. So I will not go into conclusions at the end. And then I think this is more or less it. Yes, so, well, maybe to start with the host, Minister Bessimi. Maybe just as a kind of a kickoff on the measures itself. Could you, in this round, maybe go into what measures North Macedonia developed to combat the COVID crisis? Which fiscal stimulus did you give? And then in the next round, I would ask maybe about your plans for fiscal consolidation and also what you mentioned before, the growth and financing plan. So please, Mr. Bessimi, the floor is yours.
Yes, thank you, Freek. Good afternoon to you who follow this panel here in the Avenue, and also those online. Again, I have to say, because this is a hybrid conference. Due to COVID, we managed to make it hybrid. So about the COVID, the challenges itself, as it was mentioned during the first panel. Actually, what happened as a reaction, as a response to COVID, not only we here in North Macedonia, but I think globally, many unconventional measures were undertaken. Something that before the crisis was have been seen as impossible in terms of the classical economic views, but the COVID and the urgency of the reaction made it happen. So similar approach was here. Actually, I mentioned by finalizing the first panel that actually what made this and what was our approach during this, we took the policy whatever it takes. There was, at the beginning, it was difficult, but later there were funds available internationally, and also institutionally reacted. So there was a kind of a mainstream overall globally how to drive with our reactions or a response to COVID. And at the beginning, the biggest challenge that came was about a lot of uncertainties, a lockdown everywhere, and then you don't see the next step. So the uncertainty, we could not. So that stage was basically to save lives and to protect ourselves. The next step was okay. We still have to deal with the issues that how to keep the economy hibernating. So not to have an economy that will die afterwards. Actually, to keep it alive. So the measures were designed in a way, apart from what we had to do and we are doing in the health sector to support. The second the channel of measures was in terms of the vulnerable categories of citizens. The third was protecting jobs and also those who are losing jobs. So these are the channel. Then the fourth channel was injecting cash to the business community. So because we faced the classical issue of supply side loss of value chain, these value-added chains, and also on the other side we are missing the demand. So this cost us about 11% of our GDP. The 2020, 4 packages of measures around 1 billion euros, and the 2 packages in 2021 about 180 million euros. So this is the total bill. But then when we did some calculation assessment, what was this bill impact and did it help the economy, our estimation is that using also the investment multiplier and the other stuff, is that it helped the economy about 4.2 percentage points, which means our decline of GDP around 4.5 could have been 8.7. I'm sure that this will raise a lot of debates, what kind of calculations are these, but at least we have some assessment about this. So we had to do this. Furthermore, actually, as you mentioned during the introduction, we are also trying to follow what next. So 2021, the design of the measures was not only as emergency measures, but for recovery and growth. So we in each next step or packages, we're trying to be more, to have a more targeted, and also to add, for example, the last two packages in 2021, they had a development component. So meaning that not only the loss-making companies, but also the good performing companies that making investments or creating new jobs, they are also getting subsidies. So motivating investments and the optimism. After today, we have also officially the second quarter showing a growth of 13.1% of GDP. This brings optimism, and all other indicators, not only GDP, all other indicators, budget revenues, external relation, trade, and other indicators showing that the economy is recovering. So in order to be in this time frame, I just will say that we continue to follow closely what happens, and we still remain aware about the challenge that we have, because on the ECFIN meeting, it was one, we should continue first with, we should not stop with the packages so soon. The second, they should be more designed, more targeted, and market-oriented, so will not ruin the market in the long term. And third, about the fiscal consolidation, we should think about this, solving this in midterm. So more or less, our policies are following these guidelines from the meeting, because these were discussed together and agreed. So this is what we are doing right now and what are our plans. So I'm looking forward for the other discussions as well. So thank you.
Thank you very much. That's very clear, and I think it sets a good scene for the rest of the speakers. So yes, I would like to move now to the Minister of Finance of Kosovo, Mr. Hekoran Murati. Also to you, the question, how has COVID-19, the pandemic, affected the economy of Kosovo? And what economic issues did it bring to light, which might have been there already, but were even more visible during the pandemic? Thank you.
Thank you for the question. Well, for us, it's a bit of a different story, because we had to undergo we are the third government in a row since the pandemic was onset. And on the first government, I used to be chairman of the Budget and Finance Committee, and I remember it like today. It was a Thursday. No, actually, it was a Friday. We were supposed to have to actually review the budget for the year, because we were a newly elected government. The budget hadn't been passed yet. So we were supposed to review the budget in the committee and pass it on to the plenary session for the first reading. And I get a call from the Prime Minister, and he goes, "You need to do it as soon as possible, and we need to carry out both readings by Saturday, by tomorrow, because the situation, the first two cases were discovered in Kosovo, and the situation was such dramatic that we didn't know whether we would be able as a parliament to gather from next week on. So we had to undertake emergency measures, so to say, and to gather the committee and pass the budget, both readings, within 2 days, actually. So it was quite dramatic, and nobody knew by that time what would happen. And this goes also to say that we were not necessarily able to rightly plan for the pandemic, because at that time everybody thought, I remember it like today, The next 2 weeks are the 2 critical weeks that we need to be careful for. And the idea was that we were going to shut down everything for 2 weeks, and afterwards the virus would have been eradicated, or we would have isolated somehow, and we would get back to normal. That never happened. We're 2 years in now, and we're still fighting the pandemic. So how did it affect? The fact that it lasted longer than initially planned, well, it certainly did take its toll in the economy, but it was not as, so to say, as bad as initially forecasted. I mean, I remember initial forecasts were like a drop, a GDP contraction of up to 11%. That was the forecast. It was economic Armageddon, so to say, because everything was shut down. All the supply channels were shut down, all borders were shut down, so nobody knew when this was going to end after some time, and the initial forecasts were quite grim. But then, as we learned to live with the virus, I think we managed to cope with it, because initially we had to prepare not just for the economic consequences, but also for the health. Our health system was not able to cope with what was coming, so we had to shut down the economy until we built some capacity, and for that I must say that we are thankful to our international partners, and also due to lack of a proper monetary policy mechanism, due to being a Euroized country, we needed help, and we got help from the European Union, from the IMF, from the World Bank, from the ECB, Council of Europe Development Bank, and from EBRD and all the other international partners. So we're thankful for that. It made, so to say, the management of the crisis a lot smoother, if I may say so. The effect that it had now, when we look back, it's not as bad as forecasted. The figures show a GDP contraction of 3.9%, the estimate. However, I don't think the figures really show what actually happened. The fact that a large portion of the economy is still in the informal shadows, so to say, means that the contraction did, or the official figures did not account for that. When it comes to jobs numbers, we are right now higher than before the pandemic. However, when you look at the people who lost the jobs, there are still many out there who haven't gotten back in the job market. They haven't been able to find a job yet. There's still a large number of those people. So basically, yes, the economy got back. The numbers are improving, actually, again, better than we estimated for. The government revenues are up by 33% compared to last year, compared to 2019, up 15%. Economic activity and business turnaround is similar. So the economy is, it looks like it was getting back on track, but I think it did leave some scars. And what I think, aside from the negative effects that it had in the economy, it also had its positives. For example, it forced businesses to become more creative and more pivotal. You have many more businesses who had to adopt, like introduce delivery, online sales, and so on. So quite a lot of innovation was forced. And also what is strange and worth mentioning is that our exports increased. And this was mainly due to the fact that a lot of the supply channels, the old ones, were disrupted, and there was new opportunity for countries like ours to get in between and fulfill those needs for, let's say, Western Europe or other countries in the near proximity. So it did have negative effects, but I think we managed, with the help of our partners and also with the resilience of our people, to come back stronger. Thank you.
Thank you very much. Yeah, this is also an interesting point that you mentioned, that maybe production moved into different areas. Maybe there was some nearshoring. This is something which you hear quite often as an opportunity for this region that maybe the pandemic has led companies elsewhere to rethink their suppliers, not to get something from far away, but from near. So that's an interesting point, which nicely links to the next speaker, which I would like to introduce. So this is Mr. Besar Kadia, the Deputy Minister of Finance of Albania. I would like to ask you also, what are the measures that Albania has introduced and are maybe still ongoing, and also which economic sectors were identified as those that will support the economic recovery? Maybe tourism also, I'm thinking, in Albania can play an important role. Please go ahead.
Thank you for the great organization so far. I imagine Albania had quite a unique situation compared to other countries in the region. So in November 2019, people were scared to stay inside their house because we had a great earthquake with a damage of up to 1 billion euros. And then 3 months later, people were scared to stay outside because of the COVID, while in 3 months it was safer to stay outside, and it became dangerous to stay indoors at the same time. So psychologically, I think consumers should have suffered. But what we observed is that during 2020, even though we were in lockdown for up to 2 months, and deposits went up. So there was a faith of consumers and the public in the banking sector. So we have a crisis, which is in a way what you'd expect people to withdraw as much money as possible. We had an increase in deposits to the banks. So financially speaking, the banking sector was safe. We had liquidity, the demand for credit also went up. The government provided a reschedule of credit payments, also the credit guarantee schemes for liquidity as well as for investments. It provided, as in other countries in the region, support schemes for workers who are laid off, or people, actually the government becoming the business transactor, so it was paying all the wages for them for up to 3 months, while at the same time increasing spending for welfare. 2020, which is, I guess, the same thing but that you were expecting in Macedonia and in Kosovo. We were expecting a recession of 8%, and what we ended up was 4% reduction. We haven't made an assessment whether it was due to government's policies or not, but it was a good sign. Recovery speaking, now, we were worried at the beginning that non-performing loans would go up. Actually, they went down. So compared September 2020, compared to May 2021, non-performing loans in Albania, they've gone down by 0.5%, which is a good sign that the measures were there and the business community has been able to pay them and at least to thrive. Now, we have similar results as in Macedonia and Kosovo in terms of income or tax revenues. They're higher than 2019, but they're also higher than what we expected at the beginning of January. Now, overall, I think we can think about, let's say, that the measures we've taken, now we have minimized the risk, either the health risk due to vaccination. The government's program has been since the beginning to find vaccines whenever possible, even though we were left alone in a way, so every country was looking after itself, which was a shame at the time. But somehow everyone was struggling to go in the markets and to find vaccines. That has been successful in terms of providing more than 1.5 million doses in a population of 3 million. So we've minimized the health risk. What we can see now in terms of other risks is what we cannot foresee for the next 2 or 3 months or for the next year. So if we end up in a lockdown, which we never know, we are worried about the pressure on public finances and how it will affect other government's programs in terms of investments in infrastructure or healthcare or education and other public policies. But we've taken, I mean, in the program you've asked when's the right time to stop the stimulus. we've taken the stance that 2021, it would be not a good idea to immediately withdraw all the government supports from the economy, even though things were looking good. What we did is we had, I mean, our stance has been to have an expansionary fiscal policy even in 2021. So in that sense, we expect, or we predict in our medium-term public strategy, well, 2024 is the time when we will start thinking about reducing public debt and to accommodate all the, let's say, the unforeseen expenditure that we will face in the next few months or even next year. In terms of economic growth, we haven't lost track in terms of reforms. So even though we're facing so many different challenges in terms of fiscal pressure and you name it, you always having troubles nowadays. But at the same time, you have to be careful not to I mean, lose yourself in the woods and forget about what keeps the economy growing in the long term. So institutional reforms as well as tax exemptions for for small businesses of up to 120,000 euros, they're exempt from profit tax as well as VAT, which gives them liquidity in these times of crisis, but at the same time an incentive for them, I guess, to grow in the future and to employ more. We are giving a lot of emphasis on startups and new technology, innovation programs. We are passing now a new startup law and an agency which will support this new industry. We did an e-commerce new government initiative in trying to facilitate as much as possible the new trend coming out of COVID, as well as digitalization due to the common regional market. So in that sense, our government, or our perspective, and I will finish here, is to minimize risk, health or financial, at the same time to all the necessary reforms and to also not forget that we are in all this crisis together, and therefore common regional market, open Balkans, it's the right way forward to think about it as a region rather than as individual measures. Thank you.
Thank you very much. And yes, I think also this regional dimension is very relevant and very much in the picture with the open Balkans and the common regional market approach, which will hopefully we have heard about the, let's say, the global economic outlook. There was also mention made of the risk of a so-called two-track recovery between those countries that seem to recover quite quickly and those who are lagging behind a bit. So what do you think countries can do to speed up recovery? And then the second question, in the medium term, how can fiscal policy best prepare for the post-pandemic normal? So please go ahead, Mr. Kammer.
Thanks, Felix. Let me first start by thanking the Ministry of Finance for the kind invitation to this important conference and for me to participate from Washington, D.C. Your Excellencies, ladies and gentlemen, let me first emphasize what Minister Bissimi said. We had an unprecedented policy response to the worst economic recession since the Second World War. And this unprecedented policy response has, in fact, prevented a much worse outcome. And policymakers need to take credit for that globally, but also here in the Western Balkans. The focus of this, let me just explain what the focus was of this policy response. It was to maintain the structure of the economy so that the economy could withstand the pandemic time and can be restarted after lockdowns were over, and to maintain and prevent the fraying of the social fabric of society. This was achieved in Europe-wide through job retention schemes, which saved 70 million jobs and let in place the bound between workers and jobs for restarting of the economy. As the ministers have pointed out, it was achieved through supporting firms moratoria, guarantees, and easy financial conditions so that liquidity issues would not lead to a cascading of bankruptcies and a destruction of capital in the economy. And we protected banks because firms were doing were protected, and so banks could provide continued credit to the economy. We saw the success of these policies earlier this year when we saw a very strong rebound in the first half. But this is a rebound, and the rebound is not necessarily a sustained recovery. And that's where policymakers now need to focus on. Where we see still high infection rates, as Minister Bessimi said, we moved from more generalized support to targeted support, so that should be maintained. But more generally, we need to switch policies from emergency line to very targeted support to allow the reallocation of labor and capital in the economy. As Minister Murati pointed out, during this pandemic, the structure of the economy was adjusting, the structure of the economy was already changing, but we haven't reached full employment in many of the countries yet. And so policies now need to focus on allowing workers to move from shrinking sectors to expanding sectors. This can be done through retraining. This can be done through hiring subsidies. At the same time, when we undo and unwind emergency support, we need to continue focusing on the vulnerable segments of society, since they will suffer most of the income loss by switching these policies. So that's the first part of the policy response where we need to see a change going forward to sustain this recovery. The second part, I would say, we have been emphasizing it, that vaccine policy is economic policy. And we see in countries, activity has rebounded more strongly where vaccine access was there and vaccination rates are high. And this is a downside risk for the Western Balkan countries in the times of a very infectious Delta virus. In Western Balkan, on average, vaccination rates are about 30%. This is half of what we see in the EU. And this needs to be furthered in order to make the economy more resilient to the impact of the infection. On the second question, looking very much into the medium term. Here, countries like in the Western Balkans, which have limited fiscal space, need to develop credible medium-term fiscal plans geared towards re-establishing fiscal buffers. If you know one thing, it is that the next crisis, unfortunately, is just around the corner, and the economies that did best during this economic crisis were those that had the buffers in place and could use these buffers for a very strong policy response. What does this mean for the region? Credible medium-term fiscal plans. It means, first and foremost, increasing revenue. Revenue is much, much lower than in European Union countries. There's much scope to increase revenue. This could be done through eliminating preferential tax treatments. This could be done through improving tax administration and revenue collection, and we are helping countries develop the systems there. This could also be done by eliminating those tax breaks which were given during the pandemic. This is the first part, I would say. And the second part in the medium term, which is very important, is to really look at public investment and scale up public investment in order to support this transformation of the economy, which has started to take place, but which is going to accelerate with the economy becoming more digital and with the economy becoming greener over time. So public support is needed there. We did a study a few years ago for the broader region, and it showed that there is a big infrastructure gap compared to the European Union in the region. But also it showed that when you spend €1 on public investment, in the long term, this will generate each year between €2 and €2.5 in additional output every year. And this is a very strong sign on the importance of closing the infrastructure gaps and on public investment. But what it also means, it needs to be good public investment. And here in the region, we are supporting countries to improve their public investment management regimes so that we have strong institutions and that this money is well spent. When we are looking at those, so there's a near-term solution, the crisis is not over, support now the restructuring of the economy. When we are looking at the long-term, implement credible fiscal plans, but also focus very much on investment so that the convergence to EU income levels is going to continue. Thank you.
Thank you very much, Mr. Kammer, for these very concrete recommendations. And I think it also links in very nicely with our next speaker, Ms. Linda van Gelder, Regional Director for the Western Balkans from the World Bank. I would like to ask two questions as well. The first one being, which types of fiscal and monetary interventions helped businesses and jobs here in the region, but maybe also wider? And the second, how can countries balance the need of supporting the economy in the past pandemic with rebuilding fiscal buffers? So this question I also referred to in the beginning. Thank you.
Thank you very much, and let me start by really expressing my appreciation for the invitation to be here and to say how wonderful, even though this is still a hybrid conference, to be here with people in person and discussing such interesting and important topics is really wonderful. So during the past 18 months, we have seen an enormous amount of policy experimentation as governments across the world have really been scrambling to figure out how to respond to the COVID crisis. And we don't know all the lessons, but we have learned some things about what has worked and what hasn't worked. And very briefly, countries that have more comprehensive national identification systems, higher rates of business formality, more developed digital payment systems, and crucially, greater fiscal space going into the crisis, have been able to respond comparatively more effectively in providing much needed liquidity to cushion the impact of the pandemic on the vulnerable households and firms. And so this, in some sense, lays out a little bit of an agenda of some of the things to look at going forward in terms of strengthening systems and institutions. But it's really an opportune time now to think about how to evolve the policy response. So much of the early policy response was really along the lines of do anything that it takes. Speed was of essence to respond to a complex shock that affected both demand and supply at the same time. And I think we heard very good descriptions in North Macedonia, in Kosovo, and in Albania about how the governments actually approach this. But as time has passed, it's become clear that we need to think about more discerning interventions. It was also mentioned, COVID has changed the structure of our economies. Many jobs have disappeared and they're not coming back, but new opportunities are also emerging, such as in e-commerce delivery, or actually the movement and changes in value chains. The COVID shock, as I said, has also shifted global value chains and have put perhaps greater emphasis on the resilience of those global value chains rather than just lower cost. And this opens up opportunities for countries in the Western Balkans. But without economic restructuring, countries do run the risk of disruptions, the potential of accelerating inflation, and the potential appearance of zombie firms. And all of this suggests that now thinking about more targeted fiscal and monetary policies might be prudent, and not just providing counter-cyclical support until the rebound take hold, but also to right now be thinking about how do you facilitate this economic transformation that you've all raised is something that you're already seeing in your economies. In the Western Balkans, the immediate policy response to the pandemic, as we've heard, has really focused on protecting households, firms, and livelihoods in order to avoid a massive economic collapse and further fatalities on the health side. And I think all three of the countries represented here, but across the Western Balkans, have been quite successful in that. Discretionary fiscal measures included interventions on the expenditure side and on the revenue side, such as increasing budget spending on wage and social contributions, extending unemployment benefits, stimulus payments, state guarantees, credit lines, tax deferrals, fee cuts, tax exemptions. There was a huge number of different policy responses that were put on board. The amount of COVID-related fiscal support was a bit lower than in the EU countries, except in Serbia, where they actually came into the crisis with greater fiscal space. But it was massive compared to the fiscal reserves that the Western Balkans countries had. So overall, I think that these policy actions help to prevent a much more severe contraction in the region and have helped to accelerate recovery even under what remains very uncertain circumstances. One example, in North Macedonia, a local think tank estimated that the wage subsidy scheme that was implemented by the government helped preserve 80% of the jobs that would have otherwise been lost. So in the midst of so much uncertainty, I think the immediate do everything it takes innovation has been very successful, but the bottom line message now is to really think about how to support those structural transformations in the economy and how to think about more targeted and discerning policies so that you actually can utilize most effectively the limited fiscal reserves and start to think about the process of how to build back those buffers going forward. In the interest of time, I'll stop there.
Thank you very much. I also found very interesting your remark that those countries that were better prepared were actually those who had better e-governance and e-services systems. That's pretty illustrative, I would say, and makes a case also for building them up if you don't have them yet. Now turning to the governor, Ms. Anita Angelowska-Bobozewska from the National Bank of North Macedonia, on the monetary and financial side. Now globally, central banks provided quite a significant monetary impulse and are still doing this. To what extent, given the fact that you have a fixed exchange rate regime, were you able to pursue an accommodative monetary policy? And in this respect, also, what measures did you implement, and how do you assess the effectiveness of these measures? In other words, to what extent did they actually help to preserve jobs and businesses? Thanks.
Thank you, Freek. First, let me express my gratitude to the Minister of Finance and the Ministry for inviting me to be part of this excellent event. And really, I was telling Minister he is very brave to take the responsibility to organize such an event in such challenging times. Okay, concerning the monetary policy. So we are well aware that the world faced unprecedented shock that required unprecedented policy response, including unprecedented policy response of the central banks. Given the lessons that we as the central banks learned during the global financial crisis, especially awareness of the risk of self-fulfilling crisis, this time, in global terms, monetary policy response was swifter, it was stronger, and it was better balanced and coordinated with a fiscal policy, which in simple terms means that the monetary policy or central banks were not the main game in the town, as it used to be during the global financial crisis. So this was allowed simply having in mind that there was absence of any major financial and economic imbalances in the economy. In this global context, central banks continued with extra loose monetary policy, further reducing their main interest rates. Thus, if we look at the data, we can see that 60% of the central banks globally had main interest rates below 1, and about 20% of the central banks interest rates in negative territory. The central banks didn't stop using only interest rate. They also continued with accommodative policy through different kind of asset purchase programs, which is clearly visible to the huge balance sheet increase of the central banks. In some of the central banks, in some of the economies, the size of injection of liquidity through these programs was 3 times bigger during the global financial crisis, and the pace of injection of liquidity almost twice the pace than during the global financial crisis. This is particularly the case for the advanced economies, which we can clearly see, as I mentioned, through their increase of asset sides. That is, for example, assets of the G10 central banks just in the first 6 months of the pandemic crisis increased more than double the increase seen during the first 2 years of the global financial crisis, just to illustrate the size of the packages that were provided. Still, although a lot of unconventionality was main feature of the most advanced central banks of the most advanced economies, I can also say that also a big number of emerging economies started for the first time using, also experimenting with unconventional tools such as purchase of corporate bonds on government securities in the markets, including some economies in the Central and Southern Eastern Europe. So how does our response of our central bank fit into this big picture? I would say that the picture is, or the story for us is similar, as we have embarked on accommodative monetary policy since the very beginning of the crisis, but mostly deploying conventional tools. In this context, I can mention a couple of examples or a couple of measures. First, the key policy rate. We reduced the key policy rate on a couple of occasions, more precisely 4 times, and we brought it to the historically lowest level of 1.25. Then, despite the traditionally high liquidity of our banking system, we stepped up with liquidity injection to avoid any risk of interruption of the credit flows or deterioration of the financial markets. Also very important for us that I think is useful to mention is that given the high uncertainty and a lot of speculations that emerged about the state of the economy and state of the banking system, we significantly as a central bank stepped up our communication with the public to clearly explain the facts about the state of the economy and state of the banking system, to, of course, clearly explain and stabilize the expectations of the economic agents, which are key for preserving the stability of our economy. The main unconventionality in our reaction is that this is the first crisis episode in which we, since the very beginning of the crisis, have pursued loose monetary policy and haven't tightened, despite the fact that we are having a strategy of de facto stable exchange rate, which means, when you have pressures on the foreign exchange market, first you have to stabilize these pressures by intervening on the market. However, this time was different. And the reason for this is that crisis caught us amid good official reserve buffers. They were twice as higher in comparison with the global financial crisis that we also managed successfully. And then we didn't have any significant misalignment in our economy. Structural reforms in the past improved the structure of our economy. And also, there was no significant misalignment in the external sector, which is clearly visible through a solid balance of payment and reduced current account deficit. Of course, not to forget inflation. Inflation at the beginning of the crisis was contained. Have we been successful or effective, whether our measures have been effective? Usually, when one assesses the effectiveness of the monetary policy measures, we look to financing conditions because that's the contribution that the central bank can provide. And we usually look at two parameters. First is credit support, the level of the credit support, and the second aspect is cost of financing. Concerning the credit support, because of all the measures that we undertook, credit support continued to be solid. It didn't decelerate as it usually did during the past crisis episode. It, in fact, somewhat accelerated. And if I compare with the average credit growth in the Central and Southern Eastern Europe, we are slightly above the average. Though support was mostly tilted toward the household, with some lagging behind in the segment of corporates. Then also significant share of the loan portfolio was under moratoria, which means temporary financial relief of the households and companies, about 44%. What does it mean in comparison with the EU? Significantly higher. In the EU, on average, was 12%. So that also clearly points to the effectiveness on this measure. In terms of the cost of financing, also unlike other crisis episodes, cost of financing didn't increase, but they continued in line with the monetary policy loosening. They continued to decline, and the pace of decline was somewhat faster if we compare with the Western Balkan region. And currently, the average lending rate is 4.5%, which is also below the Western Balkan region. Of course, we cannot compare with the EU because of structural and many other aspects. So overall, a lot of measures we have undertaken. It is not an easy crisis, still a lot of challenges, but we think that our measures have been effective and provided contribution to the real economy. Thank you.
Well, thank you very much for this very good overview. I also note the communication with the population, which is interesting as a kind of element for not only national banks, but I think all institutions involved in this emergency support, that you create a kind of, or let's say that you take the population with you in what you're going to do, and you sketch out a path for the next 1 or 2 years. That's probably important as well. Now, just this first round of questions to conclude with the parliamentary angle. So I'm very happy that we have Mr. Timcho Muchunski here, the chair of the Budgetary and Finance Committee from the Parliament. So how can, in your view, the Parliament help shape also the economic and financial policy, and what was your experience in this respect over the last 1.5 years? Thanks.
Thank you. So, dear ladies and gentlemen, it is truly a pleasure to address this audience of high-level officials from international financial institutions, the diplomatic corps, as well as, I think most importantly, academia and representatives of business that we see here in the audience. Thank you for supporting our country in this unprecedented time, which seems to be the word of the day, brought forward by this COVID pandemic. What can we conclude in terms of what happened in the world? The world was not prepared for this type of crisis, or to be even more precise, health systems were unprepared to deal with a pandemic. However, economic policy responses were prepared, drawing on experience from the last financial crisis dating more than 1 decade ago. The speed, the size, the scope of the reaction by policymakers worldwide, we can say, was extraordinary, preventing dark scenarios of a deep and prolonged global recession. What can we say for the case of Macedonia? Coming from the opposition, trying to be a bit more critical. We have horrible mortality statistics. Macedonia is in 4th place globally with death cases per 100,000 inhabitants, with a fatality rate of 3.4%, which is well above the world average, according to the Center for System Science and Engineering at Johns Hopkins University. The speed, the size, the scope of our domestic economic policy reaction was lower than our peers. According to the IMF's Fiscal Monitor database of country fiscal measures in response to COVID-19, the size of fiscal measures for support of households and business in Macedonia from January 2020 to June 2021 is only 3.6% of GDP. Moreover, the estimated cost for health measures is only 0.6% of GDP. In the same time, the total enlargement of general government debt is more than 15 percentage points, from 40.7% of GDP jumping to 55% of GDP. On the contrary to these policies, unproductive public spending has continued on goods and services that were not urgent and critical to deal with the crisis, and public administration employment never stopped even before election process. The recession in our country was much more painful than our peers. GDP declined 4.5% in 2020 and 1.9% in the first quarter of 2021, while many other countries began recovering. Comparison of this recession to previous ones and the composition of GDP undoubtedly shows that the investment activity was the key determinant in such a bad performance. The positive developments that we have seen in the industrial sector and exports in the last few months are led by capacities opened as success of previous government structural reforms devoted to higher industrialization and higher export diversification. In conclusion, when it comes to the policies and our view as opposition to the policies constructed, what has become obvious throughout this crisis is that immediate crisis management is essential to deal with each crisis. Here, we feel that we undeniably, as a country, failed. The number of death cases is one of the highest globally, and the GDP decline is one of the biggest in Europe. The fiscal space, as already mentioned, is substantially narrowed, and significant fiscal consolidation is on call. What government has to realize is that there are facts in front of it, and it has to be much more open at this moment with all stakeholders. If that doesn't happen, the hardest hit will continue to be those who are currently outraged by the economic measures and financial conditions on the ground. This includes businesses, and this includes, above all, citizens. What can be done in terms of a structural approach by Parliament? We, as opposition, have called for so-called COVID sessions of Parliament. What does this mean? Regular sessions of Parliament that are focused on legislation aimed at tackling economic, financial, as well as health issues that are before institutions, before citizens, and before businesses. Open dialogue with opposition is another prerequisite. This is a country, as many of you know, with an extremely thin majority in Parliament. Having legislation which is presented as take it or leave it solutions by the government is unacceptable for opposition. We are willing to continue dialogue, but on one hand, what we have seen is a hyper-production of norms and regulations coming from government in all various fields, which has created a volatile and toxic political arena. What is necessary is to focus towards the challenges that are at hand: economic and financial stability, stability in the health sector. We as opposition remain open to dialogue. We remain open to finding solution. We have presented in the past period, through experts within the party, through our parliamentary group, many policy proposals and solutions, which I hope we will have an opportunity to speak about in the second part of this panel, focused on a more swift and systematic recovery. What is necessary is openness from government. One of the more favorite terms, I would say, by the current government, which has been in power for the last 5 years, is openness to the fact that they're willing to listen. But when it comes to the relationship with the opposition, the government has to practice what it preaches. I sometimes, to put an analogy, joke, many times in my private life, I am criticized by my wife that I'm not home enough. But I have to follow up on that. If I continue to be too active at work, to not be home enough, then I will systematically build on the problem. We tell this to the government. There isn't an adequate response. Many sectors are extremely hard hit. It's not just enough for the government to physically listen to the opposition. They have to follow up on the criticism that is given to them. We are open, and we all work in the best interest of our country.
Thank you very much. I think the point is clear. Of course, an all-inclusive approach is always the best. Of course, there might sometimes be a trade-off, I guess, between speed, the speed that some urgent situation requires and the period you have. But in principle, consultation is always, of course, the best of all relevant stakeholders. Now, I see that we have been I've been a bit more generous than I wanted to be, but maybe the second round of questions we can be a bit faster, every one of us, a bit shorter, so that we catch up a little bit. So I would just like to stick to the same order as we did before. So, Minister Bessimi, I would like to hear just very shortly a bit about your intentions for moving now more to maybe a fiscal consolidation after a while, and also about the growth and financing plan you mentioned before. Thank you.
Thank you, Frank. Actually, there were excellent opportunity to see what are the experiences from the region as well in this panel. Also, the World Bank and IMF presentation here, Central Bank, and also the opposition view. So this is what we need when we have these kind of issues to deal, serious issues, the challenge. So in terms of the needs that the COVID crisis has in terms of to continue the support. The second, the fiscal consolidation is an issue that we should solve in mid-term, but it doesn't mean that we should not start today. Actually, to solve in mid-term, we should make plans from now. So in parallel, while we are doing, working in terms of supporting the economy post-COVID and still COVID there, we also do the fiscal consolidation. So what are the aspects that we do here is, as I mentioned, there are some reforms that we are undertaking, and also some systemic reforms like organic budget law, where we have in the law put the fiscal council, the fiscal rules, and mid-term fiscal consolidation, which means that we have undertaken now the budgeting process, and part of this is this conference. I just remind what I said when I opened the conference in the introductory speech. So this is in terms of opening the debate for the policies orientation, but also more specifically on the question that you address is, it's in the terms of consolidation, we work on the expenditure side, in terms of the current expenditures to actually to develop certain indicators and benchmarks, so it will be easier, visible across budget users to make sure that we have some benchmarks of better use of public funds. In terms of the capital expenditure, we also are introducing indicators that will have their economic and fiscal impact. And as last year we introduced the CAPEF index, which means to improve the efficiency of capital expenditures. And according to the plan of growth, we are introducing a new unit about the PIMA Public Investment Management Assessment process. So this was mentioned also in Prime Minister's speech. So this is an expenditure side. On the revenue side, we are ongoing on implementing and preparation of the tax reform strategy in terms of increasing the efficiency and also in terms of increasing the fairness of the taxation system in the country. Informal economy is something that we are going to tackle at the same time while we're working on the reform, because we have to see how to improve the system. And financing, the third part of the budget, is how to finance the needs that we are that we need for growth and this reform policy agenda and investments. So we will introduce also these blended and more innovative financing instruments, where we are also leverage from private sector investments, mobilizing private capital, but also development partners that has different new innovative instruments to leverage from this. And also we will introduce or launch this year these development bonds for the first time, also green bonds and project-based bonds, which means development bonds will be The revenues that will come from these bonds will be only for capital expenditures. And more specifically for green bonds, only for green investment projects. And project-based bonds might have a label of the project, a specific project. So, the additional new thing is that this will be available more for citizens, not only for weak investors, but also citizens. And we know that there are still some savings among the citizens, and we will give them opportunity also where they can have safe investments and more specific projects. So these are different types of instruments that we think will make possible to make this transformation, post-COVID transformation of the economy, to make it more competitive based on digital, green agenda, and also all other aspects of improving the productivity in our economy. So summarizing here, I will say that this fiscal consolidation goes hand in hand with financing growth, and growth which will be sustainable and also inclusive. The design of this is maybe tomorrow during the panel we'll go in more details, to have a better management of public investment projects, but also to support the economy. So thank you.
Thank you. I think it's also very visionary to already, as you mentioned, pay attention to the green agenda, the digitalization. This is something that we see also in actually all the economic reform programs of the Western Balkans countries, which I think is a very good sign. Now, moving to Mr. Murati. Also for you the question, what are your plans for the future? There is this economic revival package. Could you be saying a bit about this as well? Thanks.
Thank you very much. Well, going through these times, it's quite difficult to work, because I think Mr. Kammer mentioned that there were two speeds at which countries were recovering. So if we imagine it as a highway, it's a two-lane highway where one lane is faster, the other one is slower. But at the same time, I think each car or each economy is being forced to operate on two gears. So we have to shift in between each gear depending on how bad the situation with the pandemic is. Because it's quite a paradox, for example, to launch an economic recovery or revival package at a time where you have to tell people to stay at home and not, or try to work from home. So it's difficult to increase employability or job numbers when you're actually telling people to stay home. But we have, and that's the challenge, we have to work with that challenge. The first gear is basically the slower one, where you try to save jobs, even if you're telling people to stay at home, so wage subsidies, as many of our countries have done. And you also try to save businesses by providing liquidity, either through a moratoria of loan payments or other measures that would help their liquidity. The second gear would be, if the situation improves, we have to look at what can we do to learn from what we've uncovered during this pandemic, and which is countries that are more digitized, countries that have a more formalized economy have performed better and can perform better. And another issue is that the businesses themselves have also learned this fact, because if the government wants to help, we need to know as a government whom to help. If they don't show up in the statistics, if they don't show up at the tax administration, there is no possibility to know whom to help and how, to what extent. So they've learned to cope this. And we've also, as a government, we've tried to push with a formalization campaign, and the economic revival package includes some of the measures inside as well that actually provide incentives for businesses and to formalize and employment to formalize. Aside from helping the people who are the job seekers and the employment of the people, the second pillar of the economic revival package would be to help the businesses and the structure thereof. So changing, to help through that change in the structure by shifting or by helping them pivot towards industries and sectors that are actually increasing in volume compared to some of the other sectors that are shrinking. The third one would be public investment and helping the infrastructure, be it health sector, or be it also the road infrastructure, and building also on more environmentally friendly infrastructure. The fourth one would be helping the family as a unit, so providing those that are most in need. And with that, we're trying to also do some reforms together with the World Bank. What we've seen is that sometimes the social net is too wide to catch everyone, so we need to work on that to better target those people. And when the next wave hits us, or whatever next crisis hits us, we know whom to help. Because aside from the extent of help, speed is of crucial importance here. And I think this is more or less what we're trying to do, what we've learned from the past, and what we try to improve upon.
Thank you. This is also very, very helpful, also a very comprehensive package, I think, the economic revival package of Kosovo. Now to Deputy Minister Kadia of Albania. Also for you, what are your main priorities for the near future? Which structural reforms do you aim at? What are the sectors where you see a competitive edge? So if you could say a few things about that. Thanks.
Thank you. I'll try to be as brief as possible. We can name it whatever we want, revival or anything like that, but given the uncertainty, I think we need to try to be focused on what the purpose of government is, despite the crisis. So it's there to provide good, efficient public services at a low cost as possible, where you exclude corruption, you exclude interaction with government officials, and transparency. And digitalization or e-government is one of those things that we have, I think, revolutionized the way we provide services in Albania. Now we can get most of the government services, certificates, or other things from the police or the courts online. So every citizen, he has his own application, and even during the pandemic, they used it to go outside and to have permission from the police. That's, I think, the path that we will pursue even more in the future, where the government is held accountable through technology. We also see, in order to keep the youngsters in the country and for them to see Albania as not just their hometown or their home, but at the same time a place they can work to provide services globally, where we envisage to exclude them from few taxes as a startups, and to also provide government support and know-how with connecting them to venture capitals in order to promote them in Tirana. And Tirana, I think, will become, in the near future, an interesting place for startups in the region. And third, but not last, we always have to remember institutional reforms about helping the business community to be clear in what they can forecast for the next 4 or 5 years, rather than adapt every 6 months or every year when governments change or when ministers change. So we have developed a new business investment development strategy, where we have included the business community and what they expect from the strategy and government's commitments in terms of trade, in terms of government support, either subsidies if they need them, or human resources and connecting them in the triple helix reform. So in that regard, we have other measures which obviously take into account the current problems in terms of wages or subsidies for different sectors, or credit guarantees, or increasing spending in healthcare. I mean, this is what we are currently doing. But looking forward, I think this is what we need to remember as a region as well, on things that we need to focus long term.
Many thanks. A lot of different instruments, which is, I guess, how it should be, a whole comprehensive package of different measures. And predictability, I think, as you mentioned, is also important. I hope that when the accession negotiations between the EU on the one hand and Albania and North Macedonia on the other hand will start, that will also give a kind of extra predictability for business in both countries, what to expect in the years to come. Then I would like to move on to Mr. Kammer from the IMF. A bit of a specific question. Of course, recently we've seen the unprecedented, I think, SDR allocation to most countries, I would say, worldwide. So what will be the potential benefit to the Western Balkans from this new SDR allocation, and how could they best utilize these additional funds? That's one question. And then a quick last question. What is your view on the dilemma, also a bit mentioned by the governor, Anita Angelowska, on central banks, given the recent increase in inflation, while the recovery is still in its early phases? What kind of policy advice would you perhaps give them? Thanks.
Thank you very much. On the SDR allocation, we have made available to our member countries $650 billion at the end of August in international reserve assets, the SDR. This can be utilized in a number of ways, and it depends very much on where the countries are in the pandemic, what the economic situation is, what the international reserve cover is, and what the financing requirements are. So for countries which have problems financing the crisis response, the SDR allocation should be used to finance fighting the pandemic. The other case is where the crisis fighting is already fully financed, then the SDR allocation can go to bolstering in the national reserves. That will help building the resilience of the economy and help absorb future shocks. That's a buffer for the future. Some countries will be in between, using it for international reserves, using it for fiscal spending. So this is something countries need to decide based on their circumstances. Important is the allocation should be used transparently, and it should be used effectively and not for unsustainable policies. On the monetary policy side, so this is indeed a very critical time right now when one looks at the decision to be made by central banks and central bank governors. First of all, in general, we believe that we should continue accommodative monetary policies across a wide range of our membership. Clearly, we are not back to full employment yet, and we still have severe downside risk. The pandemic is still not over. So accommodative monetary policies is warranted. That means for central banks that they need to see through the current inflation rates. And why are we not worried about inflation in general? We see some uptick just because, for instance, energy prices were very low during the pandemic. They are going back to levels we saw before the crisis. That's normal. We see some supply disruptions that leads to spikes. But what we also see is inflation expectations are well anchored, and we don't see second round effects where we see increases in services inflation, or we see increases in wages. So that leaves us with important that inflation expectations are remain well anchored. Important for that is the credibility of the central bank and of its monetary policy. And an important ingredient of that is the independence of the central bank, which we need to maintain and preserve all over. What is important for central banks to do is, as Governor Angelovska pointed out already, very clear communication. And that communication needs to include an explanation of what the drivers of inflation are, and it needs to include to lay out what the expectations are for the monetary policy response in the future. Now, finally, if tangible risks of second round effects were to emerge, or if the recovery is taking place much more quickly than we expect. Under those circumstances, there will be a reason to tighten monetary policy, and that tightening should happen in order to deal with price pressures early on. So in a nutshell, remain accommodative in general, but be very clear on the lookout for emerging pressures. Thank you.
Thank you very much. Yes, I think it's obvious to have a close monitoring of the situation, how inflation goes, and then act upon it if necessary. This is, I think, also will be a nice, interesting discussion in our European Central Bank in a while. Then moving to the World Bank, Ms. van Gelder, talking about structural and institutional reforms, what the Minister Bessimi also said, this should go actually hand in hand with fiscal consolidation. It should not be put on the back burner, even though maybe there is a temptation to focus everything on short-term measures or on fiscal consolidation, but these structural reforms and institutional ones, which maybe also will be discussed in the next panel on good governance, but how do you see that? Can they regain a dominance in the near future?
Thanks, and I can give a very, very short answer to this. Absolutely yes. That's the very short answer. And the reason is that accelerating structural and institutional reforms, there's no other option. Ministers of finance around the world are trying to figure out how do you boost growth without further depleting scarce fiscal space. So if ever there was a time for accelerating structural and institutional reforms, now is the time. And many of the topics for discussion later in this conference touch on some of those important areas, such as the private sector development climate, good governance, and also looking at the opportunities of investing in people and taking the advantage of a move towards a greener and more climate-friendly environment. Thank you.
Very clear, so everybody knows what he or she should do. Then, moving again to the governor, Ms. Angelowska, how do you see it in the near future? Also, coming back to what Ms. Kammer said, Mr. Kammer said, is there room for further accommodative monetary policy? To what extent will inflationary developments affect this monetary policy stance? And you mentioned already a little bit in your first contribution the solid credit support, but what are the latest indicators concerning the banking system in this respect? Thank you.
Okay, thank you for the questions. First, let me remind ourselves that one of the lessons that we learned from the global financial crisis is that the policy support should not be rolled back prematurely until we see the growth solid and self-sustained. At the current juncture, where are we? Today we heard the news from the State Statistical Office. This, in general, it's good news, which means that economy is already on a recovery trajectory. We projected for the first half of this year 5.4% growth, and currently, according to the new data, is 5.2%, which is very close to the projections of the central bank. However, still the risks are surrounding the growth trajectory, which in principle means that the policy support is still needed. Do we have a room for further monetary policy support? Well, in principle, given the monetary strategy that we have, which is of de facto stable exchange rate, in such economies, central banks have to watch for two key parameters. First is the level of the official reserves in the economy, because we have to have enough official reserves to intervene in case needed. And second is the inflation, current inflation, and even more expectations for the inflation. Concerning the first pillar, which is the official reserves level, I can say, I already, I think, mentioned that they are twice as high in comparison with the global financial crisis, which means that we have adequate buffers having in mind this strategy. And without going much into details for the sake of the time, but if we refer to all standard international indicators which are used to assess the adequacy of the foreign reserves, we fare well. Second parameter, inflation. We have seen some pickup in inflation, which for the first 7 months is about 2.5%. For the year as a whole, our projection is 2.2%. In the medium term, we expect to preserve it in the range of medium inflation. However, speaking about the inflation, what is very important is to know what are the reasons, what is driving the inflation. If we have in mind that we see recovery, but this recovery is gradual, and only next year we will come to the pre-crisis level, it's clearly that this pickup in inflation that we have observed is not coming from the demand side, something that Mr. Kammer mentioned, that we have to watch very much what is the pace of recovery. So practically, mostly inflation is defined by the supply side factors, and the supply side factors which are not idiosyncratic for our economy, but which are global, coming from the external environment. We know international prices of oil, of food, and we are a net importer. If we have in mind the structure of our CPI, practically we can infer that to a significant extent our inflation is imported. And when we speak about imported inflation, having in mind the high trade openness and key role of the European Union as our trading partner, not only on the export but also on the import side, particularly import on consumption goods, it's clear that our inflationary developments will be to a great extent shaped by the inflationary developments in the EU. What is ECB expecting, at least according to the latest Governing Council press, although they, after 2 days, I think, have a new Governing Council, and we will see what will be their rhetoric. But according to the last information communicated, they are perceiving this pickup in inflation, which is also taking place in the European Union, as a temporary phenomenon. And expect next year these pressures to vanish as supply catches up with demand. However, what they underline, and we are all aware, is that risk around inflation outlook remain, especially having in mind high volatility of the primary commodities, the risk of higher pass-through of input prices to final prices, risk of inflationary expectations, and being entrenched in the wages. So having in mind these two key pillars, which define the room for maneuver of the monetary policy, what we can infer is that, yes, we still have a room, though the room is not unlimited. On top of this, as all other central bankers, we also have to be mindful of other possible side effects of too loose for too long policies. Let me mention some of them. In principle, we know that low interest rate environment can be conducive to higher risk-taking, leverage. Then also it can affect savings, which is very important in small economies, where the domestic savings is low on the one hand, and investment needs are higher on the other side, which implies to savings investment gap. And also maybe one very important aspect which deserves to be mentioned as a possible side effect in this crisis is zombification. I think Linda already mentioned. What does it mean? It means that easy financial condition can be conducive to supporting unviable businesses and preventing the emergence of new, more productive ones, which in principle can mean inefficient reallocation of resources in the economy. So, in a nutshell, I think while being aware of the need to continue and having a room to continue with a loose monetary policy, in parallel, clearly there is a need to gradually shift the focus back, or to put focus more on structural and transformational policies, which are, of course, we all know that are key for lifting the growth potential and increasing the well-being of our societies. That's about the monetary policy. Concerning the state of the banking system, according to the latest available data, the performance of the banking system continues to be solid. Capital and liquidity buffers have continued to increase, and currently they are above the level, pre-pandemic level. Quality of the credit portfolio somewhat worsened at the beginning of this year, but still NPLs remain at the low level and significantly lower in comparison with the pre-pandemic period. Of course, our measures and measures of the Ministry of Finance that were focused on the businesses helped this, because it prevented buildup of NPLs in the credit portfolio of the banking system and prevented credit crunch, because NPLs also define the level of credit activity. Profitability also remains high according to the latest data, and maybe what is even more importantly than the numbers of profitability is that practically significant part of the profit that was shown, observed, is reinvested, which means further accumulation of capital buffers, which is key to go back to the question, do our banking system have room to further support? Yes, since capital and liquidity has increased owing to different kind of measures. So practically in a nutshell, our banking system weathered the crisis well. Two main reasons. First of all, initial condition before the start of the pandemics. They were in a good shape as a result of regulatory policies, but also prudent behavior overall in the banking system, and as a result of the measures that have been undertaken during the crisis, preventing the spillover effects from the real to the financial system. Of course, we have to be mindful and have to watch the possible materialization of the credit risk, though the numbers that we see now really show that the banking system has the capacity to absorb any potential losses. Thank you.
Thank you very much. And yes, I think it's illustrative that a good starting position helps a lot for a good, healthy financing and banking sector, which is also very much dependent on good supervision. Now to end, I would like to give the floor once again to Timcha Muczunski. What in your view should have the focus in the next period in terms of measures and post-COVID reforms? Please, go ahead.
I will try to be as brief as possible. First of all, I think what we need to really focus on as a nation, but also as a region, and you mentioned this in terms of the overall public policy approach, is on good governance. This is where we have serious deficiencies. This is where we haven't had any momentum and movement. And this has extremely serious negative implications on the overall economic and financial stability of every nation. So creation of sound policies in the field of good governance. When it comes to economic and financial policies, we need to focus on policies, first of all, that create growth, and that is public capital expenditures, which we feel are severely lacking and have highlighted as an opposition. We need to start talking more and more substantially about the green economy, investment in research and development. We need to start creating measures more geared at building investor confidence and overall confidence in the system. And this is one of any key measures here would be focused on saving jobs. And finally, we need to have targeted measures, I would say more primarily aimed at sectors rather than businesses. So this is where we need a more concrete shift from what we have at this moment. But I would reiterate, overall, primarily looking forward and with a light at the end of this tunnel, although we don't know how much is left of the tunnel itself, especially considering that we are consistently re-evaluating the overall epidemiological situation, and even most medical experts can't give a fair evaluation of when this will end. We have seen what the deficiency in our overall system of governance have created in terms of economic and financial results. We need to speak about fighting corruption. We need to speak about what is going on in our judicial systems. And I think if we manage these, if we manage these conditions adequately, together with good economic and financial measures, then we will be able to come out of this crisis in a much more productive and positive manner, which in the view of my political party and myself included, we haven't been able to do to this moment.
Thank you very much, and I fully agree, and I think also the next panel will definitely talk about good governance, about rule of law, fight against corruption. That is something to look forward to. Well, I would like to end this panel by thanking you all very much. I think it's been an interesting discussion with a lot of different elements. We will have a written summary tomorrow, I understand, so something that will be distributed among all participants. I think we have done quite nicely on time because we started at 3:15, so we're only 5 minutes over time, and we still have 10 minutes, I believe, before the next panel starts. So many thanks again to everyone, and well, I look forward to the next panel. Thank you.